Focusing on a company right now, Insecticides India is on our radar. The company's board has approved a 50 crore rupee buyback. And to talk more about this and the plans ahead, we have with us Mr. Rajesh Aggarwal, MD at Insecticides India. Mr. Aggarwal, thanks very much for joining in. So you're doing a 50 crore rupee buyback. Just tell us the rationale, the cash levels right now, and your own capex plans, and the balance sheet side of things. The move behind going in for this 50 crore rupee buyback.
Thank you, and I welcome all the viewers. So, yes, this was the opportunity when the company is making good cash, because after the COVID, the time was tough, but in the recent year, we are able to make good cash margins. So, company is doing good, and it's perfectly we can say we are sitting on zero debt, and we had a lot of cash available with us. The team came to
How much, sir? How much is the cash level?
About 70 crores. So we plan to reward the investor. So, but it's continuously happening. Happening means like we are generating more and more cash because we are changing the product mix. And by changing the product mix and introducing the new value-added products, I'm very, very confident that we'll be like for last 3 years, we are planning to increase the gross margins or reduce the RMC. So RMC, which was trailing around 76, 74, 72%. So 70% was the target of this year, but it is visible in the half year. We will be able to achieve better. So I'm pretty confident that the type of investment which we wish to make in next 2 years, about 100 more crores in our projects, that will be able to generate in this year itself. So with the sitting on cash and having the balance, we thought it's a good time to reward the investor. So we planned a buyback of 50 crores.
All right, Mr. Aggarwal, I think the street wanted either a bigger quantum or a higher price because, in the last 10 days or last, I think, 7 days, the stock has corrected, I think, from around 1,070 rupees to 922. From a shareholder's perspective, it's always dil mange more, right? But that's about the buyback, and you've explained your rationale. Let's focus on business. For this year, what kind of a growth are you looking at in revenue terms? I think on volumes, you were guiding for high teens or 20% also. You could confirm that. On the revenue parameter, what kind of growth? And margins, I think you were hinting at close to around double digits. So 3 numbers: revenue growth, what will exports look like, and margins.
Okay. So revenue growth is not a big target. So it can be somewhere between 5 to 10%. But in terms of volumes, yes, we'll be growing. And then we are going to grow on the premium product side. So generics, I've done a lot of tail cutting also in this technicals and the formulations brands. So this will further increase the momentum of our generating the better margins. So margin side, yes, you rightly said that we'll have a strong growth. Actually, it should be in the double digit because as the volumes of the premium product goes up, it will be supporting more. So very positive. Export front, yes, the markets are still tough, but we are improving. So this improvement will be visible, some in this quarter and the next quarter also. But the growth targets with what we had for the international business, I'm not sure that we'll be able to double ourselves. But yes, definitely we'll have a positive year in the export.
But earlier you were talking, I think, about 150, 125 crores of exports.
Yes, that is possible.
We 125 or 150, which one?
So somewhere in between. Very difficult to comment. How much I am able to feed the market depends on that. So 150 is a possibility. 125 is the minimum, I can say.
This premium products is something that you've sort of spoken about in your calls, etc. as well. This is about 30-35% of your business now?
We are working on this and trying to increase this kitty. So we divide them into Maharatnas and Focus Maharatnas. So Focus Maharatnas are touching 35%, which are large products, about a dozen. And then there is another set of Maharatna products, which is also trying to touch between 25 to 30%. So this year, the target is to cross 60% as a whole. So our major focus is like we focus around the premium products and the other product range, the generic products, what we have, that will be somewhere between 35-36%. So this completes the entire kitty of our products.
Sorry, that 60% number is what, Mr. Aggarwal?
It is the premium products.
Share of premium products as a percentage of sales,
60% plus this year.
I see, I see. And this is both that Maharatna and Focus Maharatna. So yes. As this continues to grow, could you give us, because you were very confident on margins, what is the aspiration on at a EBITDA margin level?
Like we'll grow step by step. Like this year, we have made an improvement, and in the Q1 itself, we have crossed 10%. I believe that we should continue with this number in Q2 also, or it might improve a little. Let's see the performance in the September month. So the results will be clear. But I believe that with our vision of introducing more and more products and focusing around the premium product, we should be able to improve by 100 to 150 points every year for next few years.
100 to 150 basis points margin improvement every year. For the next couple of years. So that's a big statement. So I'm just confused about one thing. You're growing your premium products business. It's going to go up to 60-70% of the total pie. You're growing your margins. Your volume growth sort of guidance is 20%. Then why is the top line only growing at 5 to 10%? Why aren't you getting better top line growth with all of these levers coming together?
Actually, in the COVID period, we had seen that the prices in the market had gone to a level which were unbelievable, and the entire industry around the world thought they are the realistic prices. But after that, there was a sudden fall in the pricing, and that brunt we had to bear for last 2 years. Now the market has stabilized, the prices have stabilized, and it looks that the market has already touched down the bottom, and it's showing little improvements now in the pricing. So with the market stabilizing, the prices have come down. So yes, the net realization, even after achieving the volumes, is not matching what we were doing in the past. So volumes are going up, but yes, still the value is not going up that way. So we are focusing on...
Yeah, got that. So 5 to 10% revenue growth, margins will improve by 150 basis points. We're taking you at around 10% for this year at least, since you mentioned double-digit margins. Final question on working capital days. It was, I think, at around 150 last year, but you're guiding that it'll come down further.
Yes.
Where does it come down to?
I don't remember exactly, but it has improved by 30-40 days. And I think that will continue because we are working, when we are working around these products, the inventory levels also are coming down for the company as a whole. Because when we were focusing around generics, then I had to keep large stocks. So that part is also improving. So overall, you'll see the improvement.
Okay, all right, Mr. Aggarwal, thanks a lot for joining in. Well, we'll hold you to these numbers. Wish you well. The intent of buyback was good, but as I said, the shareholders seem to have wanted something more, given the fact that the stock has corrected close on 12-13% in the last few days. Thanks a lot for joining in.